Hello traders, today is the 2nd of June 2010. This video is about what I call a double exhaustion, okay? So in the first part of the video, I talk about the exhaustion pattern, okay? What you look for is a candle of similar size going in one direction and then another huge candle on top of it, okay? So you are looking for average candles, similar size, okay? And another one on top that come either almost double the size of the ones below. Okay, if it's a downtrend, you'll see them going down, similar size, and another one following a huge one that will follow like this case here. Okay, you see all these candles here, they are similar size, and then suddenly you have this huge candle here. This is what we call the exhaustion. Okay, and I told you that you sell after you see a weakness after this bearish candle here, you sell. Okay, this is what we did. Okay, now what's happened? Somebody tried to push the price back here. You see this, if you see the candle at the side, you know this is a forcing. Okay, there's a game going on in this market. It's like a forcing. Somebody tried to force it back up this way here. Okay, and only look, this is another huge candle here again, similar to this one here, almost parallel. Okay, and what do you see? Another bearish candle falling. That's what we call a double exhaustion. Okay, so the key element you need to remember that the price is going in one particular direction, and you check the size of the candle. The size of the candle should be almost the same. Okay, you look here, from here to here, almost the same, and then suddenly another candle comes and is almost double the size of the previous candles. Okay, this is valid in the uptrend and also in the downtrend. Okay, so boom, 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 boom. They're enjoying themselves, and suddenly somebody come here and get a bit wild. That's what we are talking about. Okay, so creating a kind of confusion here. This is a huge one. Okay, you see they even got the upper tail here, followed by this bearish candle here, and then we sell here. But somebody tried to spoil the party here. Okay, and they bring this huge candle here. Okay, this is a USD yen. Okay, I don't know what's happening there. These people, they do a lot of funny things. That's why I say that this USD yen is not very friendly currency pair, because sometimes some funny things happening here. But anyway, let's see what's happened. So this huge candle here, this is the first exhaustion, and this one followed by this huge one again. You see, now only to be followed by a bearish candle. That's why I'm calling it a double exhaustion. This candle is almost the size of this candle, both almost parallel here. Okay, and what you see, the price coming down. It's kind of a double top of forming here. We'll see, but like I said, the USD yen currency pair is not technically friendly currency pair. You need, if you want to trade this currency pair, I think it's best for the scalpers. Okay, you come in fast, out in, using the stochastic at every point almost. But this video is about the double exhaustion. Okay, so you see this candle followed by bearish, another one here. Okay, so all these bearish cancel, the 1, 2, 3 has cancelled this one. Okay, cancel completely this one. Okay, so this movement here from here to here is, in fact, is a fake. It's a fake candle. Okay, but sometimes, because the market want to push the price to one particular level, especially sometimes they want to move it to the upper Bollinger Band level. Okay, so the market controller, those who got the money, who control the market, they will move the price, push it to the edge of the upper Bollinger Band, the Bollinger Band 50 volatility 2. So we are on 3-minute chart, so I believe this will be happening on the 15-minute chart, where they try to move the price to the edge of the upper Bollinger Band. So because everybody knew that they should sell, okay, but the market movers decided to move it to the edge of the upper Bollinger Band. This is something you need to pay attention to, because in the market sometimes I hate that a lot, because it's clear that you must sell. Okay, you see that there is a supply in that level. Okay, you know that you have to sell. Almost everybody know that they must sell. Okay, and some people will come in. Okay, I don't know whether it's the brokers or the market controllers. They try to kick people out of their short position, and they move the price to the upper band of the Bollinger Band, even though everything is set up to enter the trade. But like I said to you, it's better to always sell if you want to avoid this kind of situation, to sell at the edge of the upper Bollinger Band. It doesn't matter which time frame you are in, okay? Very, very important things to do, because to avoid this, because you see the stochastic is overboard, okay? Maybe RSI also is overboard, and everything is set up clearly that you see the exhaustion pattern like it's happening here, okay? And then you sell, okay? But sometimes if the price is not on the upper Bollinger Band edge, they will push it to the upper Bollinger Band edge, because some people they do from one lower band to the higher band, okay? So they push the price there. Another thing I need to mention here is that some people also use the bank, because I believe the bank sometimes, some of their traders, they don't know exactly how to trade. So, but because they have the money to control the market one way or another, God knows how these people doing it. So they will move the price from the pivot, the central pivot level to R1, and even though sometimes you know that it's time to sell, they will force it and force it and force it, especially in the night time. That's why you stay away from the Asian session, and they force it up to the R1, and then they sell it there. And sometimes they will do it from the central pivot level to the S1, forcing the price to the opposite direction just to satisfy and fill the pocket for free. I'm not saying that this is a verified information, but this is only my observation of something I observe in the market. A lot of strange things in this market, a crazy thing. I hope one day everything will expose itself so people know exactly what's going on. So be very, very careful. If you want to sell, especially those who using the pivot level, okay, do not sell between two pivot level, okay? Sell at the edge of the pivot level, because the money will move from one central pivot level, one pivot level to another pivot level, okay? That's another subject. I will do a video about it later. Also remember, also some people are moving the price from the lower Bollinger Band if it's in the uptrend to the upper Bollinger Band, and some people are moving the price if it's in the downtrend from the upper Bollinger Band to the lower Bollinger Band. But the key here to remember is the exhaustion pattern. When the price will move in one particular direction, the candle size will be similar. Average size of all the candles in one particular direction will be almost the same, and then suddenly you see a candle that is double the size of the previous candle, okay, either in the uptrend or the downtrend. This will signal, as we see here, from here to here, they all have a similar size, and now suddenly you have this huge one here, followed by a bearish candle here. That's what we call the exhaustion pattern, okay? Now this video is about to double the exhaustion pattern. After the exhaustion was signaled here, people sold it here, the price went down. As you can see, it went down. All this 1, 2, 3 candle, they cancel this bullish candle here. Now somebody tried to push it back up again, as you can see here with this two bullish candle here. You see the size of this one is almost the size of this one, followed by another 3 candle here, 1, 2, 3, almost canceling this one again. You see somebody again is trying to push it up. We'll see who will win. This is the fight between the bulls and the bear, by the way, because all the market movers sometimes they fight between them, because it's like the biggest traders are fighting, okay? So this house or this bank will say, oh, it had to go down. This bank say that it had to go up, and so on and so on. And also, but one thing you need to remember today also, that today early in the morning, the Japanese Prime Minister has resigned also. So there is a kind of this kind of sentiment towards the yen, the weakness of the yen. People are willing to sell the yen because of the political instability right now in Japan. So that's why the USD yen is going up. So it's difficult to sell it right now, because people think that things are not quite strong, fundamentally strong in Japan right now. The problem was that the coalition government in Japan has promised people to dismantle one of the American military base, but they failed to do that, or they changed their mind on that matter, and the population asked for the resignation of the Japanese Prime Minister, and it did that early this morning. And I was here, and Bloomberg was giving us the news also. So this is why we have all these things happening, because sometimes in the forex market, people, the the banks, okay, the institution, okay, the market movers. Once there is a confirmed fundamental, okay, they will just keep doing their own thing. So that if they think that the yen is now weak or should remain weak, they will just buy anyhow. They won't follow the technical at all. So they will just be buying. I think this was happening here. Hopefully, we'll see. But is this what we call the exhaustion pattern clearly, usually on a 3-minute chart or on a 5-minute chart. Okay. So till next time, enjoy yourself and have a happy trading. Thank you.